All right, let's unpack this. Get ready for a deep dive into Singtel.
Oh, yeah.
They're aiming to be Asia's digital powerhouse.
That's right.
And we're going to see if their plans actually hold water.
Exactly.
We've got their annual reports, financial statements, all that juicy insider info.
All the good stuff.
So we're not just skimming the surface here.
Nope.
We're going to dissect their business segments, their strategies, and most importantly, how they plan to keep those dividends coming for shareholders like you.
That's what we want to know.
What intrigues me is their ambition to actually transcend traditional telco boundaries.
Absolutely.
They're not just laying cables anymore.
No.
They're building digital ecosystems. Think data centers, AI platforms, even dipping their toes into GPU as a service.
Wow.
It's a bold play.
It is.
But the execution has to be flawless.
It does.
Right. And they're not putting all their eggs in one basket.
No, they're not.
Their business segments are spread across Singapore, Australia, and several regional associates, each with its own unique challenges and growth potential.
Absolutely.
Starting with their home turf, Singtel dominates the Singaporean market.
They do.
They've been aggressively rolling out cutting-edge tech like 5G network slicing,
Oh, yeah.
which, by the way, allows them to create dedicated virtual networks within their infrastructure.
I see.
This means they can customize network performance for different needs.
Okay.
Imagine lightning-fast speeds for autonomous vehicles
Wow.
and robust bandwidth for streaming services,
Right.
all running on the same infrastructure.
So cool.
That's a game changer, especially for businesses that rely on speed and reliability.
It is.
But what about NCS, their digital services arm? They've seen tremendous growth recently, haven't they?
They have.
NCS is indeed a rising star,
Yeah.
securing a remarkable $3 billion in new business this year alone.
Wow, that's a lot.
They're focusing on end-to-end tech solutions for businesses,
Okay.
particularly in AI, cloud computing, and cybersecurity. They're even investing heavily in developing local tech talent,
I see.
which is crucial for sustainable growth.
It is.
And then there's Xera,
Yeah.
their data center business, another area experiencing rapid growth.
They are.
Xera is strategically positioned to capitalize on the data explosion,
Okay.
fueled by AI and data-intensive applications.
Yeah.
Their valuation at $5.5 billion is a testament to their potential,
Wow.
and they're aiming to more than double their capacity,
Really?
which has attracted significant investment from global players like KKR.
Interesting.
Okay, so they're firing on all cylinders in Singapore.
They are.
But let's shift gears to Australia,
Okay.
where Optus, their subsidiary, is facing a tougher battle.
Yeah.
The Australian landscape is significantly more competitive. While Optus is a major player in mobile and home services,
Right.
their enterprise fixed business is shrinking.
Oh.
They're being squeezed by hyperscale cloud providers and rising costs,
Oh, I see.
making it a tightrope walk for them.
It is.
They'll need to innovate and differentiate themselves to stay ahead of the game.
They will.
And how are their regional associates like Telkomsel in Indonesia and AIS in Thailand performing?
Yeah.
It seems they're tapping into some exciting growth in emerging markets.
They are.
The regional associates are indeed capturing the rising demand for fixed broadband and mobile convergence. Strategies like integrating IndiHome with Telkomsel in Indonesia
Okay.
and 3BB with AIS in Thailand
Yeah.
are not only creating cost synergies, but also unlocking cross-selling opportunities.
Wow.
This is where a lot of their future growth might come from.
Interesting.
So we've painted a picture of their diverse business segments, each with its own set of opportunities and challenges.
Yeah.
Now let's dive into the numbers
Okay.
and see if their financial performance matches their ambitious goals.
Right.
First up, the income statement.
Yeah.
What are the key metrics that jump out at you?
Well, despite various headwinds in different markets, their operating revenue has remained relatively stable in FY 2024.
Okay.
But if we look closer,
Uh-huh.
we see a 3.4% decline in their core business.
Oh.
Excluding TrustWave, which they divested in January 2024.
Okay.
So there's some underlying pressure on their traditional revenue streams.
Stability on the surface.
Yeah,
But some cracks underneath.
there are.
What about their profitability? What does the EBITDA tell us?
Their EBITDA,
Yeah.
which indicates their operating profit before accounting for depreciation and interest,
Right.
also declined slightly by 2.4% for their core business.
Okay.
This reflects the pressure on their margins,
Yeah.
especially in Australia.
I see.
So while they're generating revenue, they're also facing increased costs.
All right, revenue and EBITDA are sending mixed signals.
They are.
What about their bottom line, the net profits?
Yeah.
Did they manage to keep their earnings afloat?
The reported net profit paints a rather bleak picture, with a significant 64% decline in FY 2024. But there's a catch here.
Okay.
This drop was heavily influenced by one-off exceptional items,
Right.
including a large impairment charge on Optus's goodwill and assets.
Okay, so exceptional items are distorting the picture.
Yeah.
What's the story if we look at the underlying profit, excluding those one-offs?
The underlying net profit reveals a much brighter picture, showing a 6.8% increase.
Right.
This was primarily driven by strong growth in Airtel, one of their regional associates.
Right.
It suggests that their core operations, excluding those exceptional items, are actually performing quite well.
That's a crucial distinction.
It is.
The underlying profit is definitely more representative of their ongoing performance.
Yeah.
Now let's move on to their balance sheet.
Okay.
What's their financial position looking like?
Singtel has a robust balance sheet.
Good.
They've been actively managing their capital through a strategic asset monetization program, unlocking billions of dollars in recent years. This has allowed them to fund growth initiatives and reduce debt.
Okay.
Their net debt stands at $7.8 billion,
Right.
a decrease from $8.3 billion a year ago.
So they're not just spending money, they're also actively managing their debt. That's a good sign.
It is.
But what about the all-important free cash flow?
Right.
The lifeblood of dividend payments.
Yeah.
What's the situation there?
They generated $2.57 billion in free cash flow in FY 2024.
Okay.
A slight decrease from the previous year,
Right.
mainly due to lower dividends received from their associates.
I see.
This raises a critical question.
Oh.
Are their dividends sustainable?
Yeah.
Given this dip in free cash flow and their ambitious investment plans?
Now that's the question on every shareholder's mind.
It is.
We'll have to dig deeper into their dividend policy.
Okay.
And see if they can maintain their commitment to shareholder returns.
Right.
But for now,
Yeah.
let's take a quick break. And we'll be back to continue our deep dive into Singtel's financial health and their plans for the future.
Sounds good.
Welcome back. We've explored Singtel's sprawling business landscape and gotten a taste of their financial performance.
Right.
Now, let's dig deeper into how they plan to generate value for shareholders like you.
Okay.
Dividends are obviously a big part of that equation.
They are.
But they've also hinted at share buybacks.
Interesting.
So let's unpack their strategy and see if their actions match their words.
Right.
They've made it clear that returning value to shareholders is a top priority. In FY 2024, they paid out a total of 16.5 cents per share in dividends, which included a special dividend of 6.5 cents.
Wow.
That's a pretty substantial payout.
It is.
But as we discussed earlier, there are some concerns about the sustainability of those dividends.
Yeah.
Especially with the recent dip in free cash flow. Right, that's the elephant in the room.
It is.
How can they assure investors that those juicy dividends will keep flowing?
Yeah, that's the question.
Especially with all the investments they're making in new growth areas.
Exactly.
They're pursuing a multi-pronged approach.
Okay.
Firstly, they're focused on revitalizing their core businesses in Singapore and Australia, aiming to stabilize revenue and improve profitability.
Right.
It's about squeezing more efficiency out of their existing operations.
Yeah, make those assets sweat.
So it's not just about growth.
No.
It's also about optimizing what they already have.
Exactly.
Secondly, they're doubling down on their growth engines,
Uh-huh.
NCS and Vexira,
Okay.
to generate new revenue streams and higher margins.
Right.
These are the businesses they're betting on to drive future growth.
Interesting.
It's a classic balance between maximizing existing assets and investing in future potential.
It is.
Yeah, precisely.
And thirdly, they're continuing their smart capital management program. They've identified another $6 billion worth of assets they could potentially monetize.
Wow.
Which would further fuel growth and shareholder returns.
So it sounds like they're pulling out all the stops to keep those dividends coming.
They are.
But they're also facing some pretty significant challenges.
Yeah, there are some headwinds.
The competitive landscape is getting fiercer.
It is.
Especially with those hyperscale cloud giants breathing down their necks. And let's not forget the ever-changing regulatory landscape.
Right. Lots of moving parts.
You're absolutely right.
The competition is relentless.
Yeah.
And they need to stay ahead of the curve.
They do?
To navigate these pressures.
Uh-huh.
They're refining their cloud and digital service offerings.
Okay.
Forming strategic alliances. And focusing on niche markets where they can differentiate themselves.
So it's about being agile and finding those pockets of opportunity where they can truly shine.
Absolutely.
Exactly.
On the regulatory front,
yeah,
they're actively adapting to new rules in areas like cybersecurity, data privacy, and consumer protection.
Okay.
They're enhancing their scam protection mechanisms and participating in industry-wide initiatives to promote digital safety and inclusion.
It's a reminder that businesses don't operate in a vacuum.
No, they don't.
They have to be responsible corporate citizens and adapt to the evolving regulatory landscape.
Right.
But let's not forget about their massive investments in 5G.
Yeah.
That's got to be a major risk factor.
5G is a game changer, no doubt.
Yeah.
But it also presents challenges.
Okay.
The business case for 5G is still evolving with uncertainties around monetization and potential for earnings dilution.
I see.
They're managing these risks by focusing on developing compelling 5G use cases, driving 5G device adoption, and streamlining their 4G and 5G infrastructure for maximum efficiency.
So they're betting big on 5G.
They are.
But they're also aware of the risks.
Yeah.
And are taking steps to mitigate them.
Absolutely.
It's a high-stakes game.
Yeah.
And only time will tell if their bets will pay off.
That's right.
Now, shifting gears a bit.
Okay.
I'm curious about their approach to corporate governance.
Yeah.
How well is Singtel managed, and what mechanisms are in place to ensure transparency and accountability?
Their annual report provides a detailed overview of their corporate governance structure. And I must say, I'm impressed with what I see.
Real.
They have a diverse and experienced board of directors, bringing expertise from various sectors.
I see.
They've also established specialized board committees to oversee specific areas like audit, risk, sustainability, corporate governance, and executive compensation.
It's like having a team of experts, each focusing on a critical aspect of the business.
Right.
To ensure checks and balances are in place.
Exactly. And they highlight the role of their lead independent director, who plays a crucial role in ensuring the board's independence from management. They lead the evaluation of the chairman's performance.
I see.
And provide a direct channel for shareholders to raise concerns.
It's like having a dedicated advocate for shareholder interests at the highest level of the company.
Right.
That's reassuring.
It is.
But let's be realistic.
Okay.
Even with the best governance.
Yeah.
There are always risks associated with any investment.
There are.
What are some of the key risks that investors in Singtel should be aware of?
We've already touched on some of them. Fierce competition, regulatory changes, and the inherent risks of their transformative investments.
Right.
But they also highlight macroeconomic factors, cybersecurity threats, and their reliance on third-party vendors as potential risk factors.
Let's break those down.
Okay.
What are some of the macroeconomic headwinds they're facing?
They cite the weakened global economic outlook, rising interest rates, and inflationary pressures as potential challenges.
Okay.
These factors could impact consumer spending on telecommunications services, increase their borrowing costs, and squeeze their margins.
So it's not just about their own performance, but also about navigating external factors that are outside their control.
Right, macro headwinds.
Exactly.
And then there's the ever-present threat of cybersecurity breaches.
Yeah, that's...
They acknowledge the increasing sophistication of cyber attacks and the potential for data breaches and disruptions to mitigate these risks.
Yeah.
They've implemented a robust cybersecurity framework, invested heavily in security technologies and talent, and regularly conduct vulnerability assessments and penetration testing.
It's like an ongoing arms race against cyber criminals.
It is.
Constantly evolving their defenses to stay ahead of the curve.
Right.
Another risk factor is their reliance on third-party vendors.
Okay.
For things like network equipment and IT services.
Yeah.
Disruptions in their supply chains, vendor performance issues, or even cybersecurity breaches at their vendors could have a significant impact on their operations. So they're not just responsible for their own security.
No.
But also for the security and reliability of their partners and vendors. It adds another layer of complexity to their risk management.
It does.
Absolutely.
And now, circling back to the topic of dividends,
let's
delve into the specifics of their dividend policy.
Yes, let's get to the nitty-gritty.
All right.
How do they determine the dividend amount each year? And what factors do they consider?
They have a progressive dividend policy,
Okay.
aiming to grow their dividends over time. But it's not a guarantee.
Right.
Their board of directors takes a holistic view, considering their earnings, free cash flow, capital expenditure plans, and the overall economic outlook.
It's a lot to balance.
It is.
They aim to strike a balance between rewarding shareholders and retaining sufficient capital to fund growth and maintain a strong financial position.
So balancing the needs of the business with the desires of shareholders.
It's a delicate balancing act.
It is.
Trying to keep both shareholders and the business happy.
Right.
But knowing their policy and the factors they consider provides valuable insights for investors who rely on those dividends for income.
Absolutely.
Now, before we move on to the final part of our deep dive,
Okay.
let's zoom in on some specific financial metrics that provide a deeper understanding of their performance and financial health.
Right.
What are some of the key metrics that you pay close attention to?
One metric that I always find insightful is the return on invested capital, ROIC.
Okay.
It tells us how effectively they're using their capital to generate profits.
Right.
Their ROIC has been fluctuating in recent years, reflecting the challenges they've faced and the investments they've made.
Okay.
It's a key metric to monitor going forward.
Yeah.
As a sustained improvement in ROIC would indicate that their strategic transformation is bearing fruit.
It's a good measure of whether they're investing wisely and generating a return that justifies the capital they're deploying. What about other metrics that shed light on their financial stability and risk profile?
The debt-to-equity ratio is another important one.
Okay.
It measures their leverage or how much debt they're using to finance their assets.
I see.
Singtel's debt-to-equity ratio has been relatively stable.
Okay.
Which is a positive sign.
Good.
However, as they continue to invest in capital-intensive areas like data centers, it's crucial to keep a close eye on this ratio to ensure they're not taking on excessive debt.
So it's about finding that sweet spot between using debt strategically to fuel growth while keeping their financial risk in check.
Right, exactly.
And to assess their operational efficiency, I look at metrics like asset turnover, which measures how effectively they're using their assets to generate revenue.
Right.
Singtel's asset turnover has been relatively low compared to some of their peers,
interesting.
suggesting that there might be room for improvement in optimizing their asset utilization.
So it's not just about having assets.
It's about making those assets work harder and smarter.
Right.
It's like getting more bang for their buck.
Exactly.
Precisely.
These metrics, when analyzed together, paint a comprehensive picture of their financial health, their operational efficiency, and their ability to generate returns.
It's a reminder that numbers tell a story.
They do.
And it's up to us, as informed investors, to decipher that story and make sense of the underlying trends.
Right.
But let's not get lost in the numbers.
No.
I think it's important to ground our analysis in real-world examples.
Okay.
What are some concrete examples of how Singtel's strategic decisions are impacting their customers and the broader market?
One compelling example is their pioneering work in 5G network slicing.
Oh, yeah, we talked about that.
As we discussed earlier, this technology allows them to create dedicated virtual networks within their 5G infrastructure, tailored to the specific needs of different industries. For instance, they can create a slice optimized for low latency, critical for applications like autonomous driving, while another slice can be designed for high bandwidth, ideal for streaming high-definition video.
So cool.
It's like creating a custom-tailored network experience for each user, unlocking a whole new world of possibilities for businesses and consumers alike.
Exactly.
Another example is their push into GPU as a service, a rapidly growing market driven by the increasing demand for AI and high-performance computing. By offering this service, they're enabling businesses to access powerful computing resources on demand.
I see.
Without the need for upfront investments in expensive hardware.
That's a game changer.
It is.
It's like democratizing access to cutting-edge technology, making it more affordable and accessible for a wider range of businesses.
Precisely.
These real-world examples demonstrate how Singtel is not just adapting to the digital age, but actively shaping it, driving innovation, and creating value for their customers and the broader ecosystem.
That's right.
It's impressive how they're leveraging their expertise and infrastructure to push the boundaries of what's possible in the digital realm.
They're really innovating.
But as they venture into these new frontiers,
Yeah.
they're also encountering challenges and ethical dilemmas that come with the territory.
It's not all smooth sailing.
What are some of the key considerations they're grappling with as they navigate this complex landscape?
One crucial consideration is data privacy and security.
Yeah, with all that data they collect.
As they gather and analyze vast amounts of data from their customers, they have a responsibility to protect that data and use it ethically.
Right.
They've implemented stringent data governance policies
Okay.
and invested in technologies to safeguard customer information. But the risks remain significant.
Yeah.
In an era of increasingly sophisticated cyber attacks.
It's a constant battle to stay ahead of the bad guys.
It is.
Especially as new vulnerabilities and attack vectors emerge.
Right.
Another challenge is ensuring digital inclusion.
Okay.
As they roll out advanced technologies like 5G, they need to ensure that these technologies benefit everyone, not just a privileged few.
Right. Equitable access.
They're actively working to bridge the digital divide by providing affordable access to connectivity, promoting digital literacy, and supporting initiatives that empower marginalized communities.
It's about making sure that the digital revolution leaves no one behind.
Right.
Precisely.
And then there's the ethical dilemma of AI and automation.
Yeah, that's a big one these days.
As they integrate AI into their operations, they need to consider the potential impacts on jobs and livelihoods, ensuring that these technologies augment human capabilities rather than replacing them altogether.
It's a complex equation.
It is.
Balancing the potential benefits of AI with the need to protect and empower the human workforce.
These challenges highlight the importance of Singtel's commitment to sustainability, not just in terms of environmental impact, but also in their social and governance practices.
It's about building a business that's not only profitable, but also ethical, responsible, and contributes to a more equitable and sustainable future.
Well said.
We've covered a lot of ground in this part of our deep dive, from their dividend strategy and risk management to their corporate governance and ethical considerations.
It's a lot.
It is.
It's clear that Singtel is a company striving to do the right thing while navigating a complex and ever-changing landscape.
Yeah, they've got their work cut out for them.
But they're not immune to criticism.
Right.
What are some of the key criticisms they've encountered?
Okay.
And how are they responding to those concerns?
One common criticism, particularly in Australia, relates to network outages and customer service issues.
I see.
They've been investing in improving network reliability and customer support. But these remain areas where they need to demonstrate continuous progress.
Network reliability is paramount.
It is.
In today's hyper-connected world.
Absolutely.
Any disruption can have a cascading impact on businesses and individuals.
It can.
Another criticism they've faced is related to their pricing strategies.
Okay.
Some argue they're too expensive compared to competitors.
Right.
They defend their pricing by highlighting the value and quality of their services. But they also face pressure to offer competitive pricing plans to retain customers in a fiercely competitive market.
It's a classic balancing act between maintaining profitability and staying competitive.
It is.
In a price-sensitive market.
And they've also faced scrutiny regarding their involvement in data retention policies mandated by governments.
Oh, yeah. That's a tricky one.
This raises concerns about privacy and potential misuse of customer data.
Right.
They comply with all applicable laws and regulations, but acknowledge the sensitivity of these issues and the importance of transparency and accountability.
It's a delicate tightrope walk.
It is.
Balancing national security concerns with individual privacy rights.
These criticisms underscore the importance of ongoing stakeholder engagement, transparency in their operations, and a willingness to address concerns and continuously improve their practices.
Absolutely.
It's about building trust and maintaining a strong reputation.
It is.
Which are essential for long-term success in any business. Especially in the telecommunications industry, where customer loyalty is paramount.
Right.
Now, as we move towards the final part of our deep dive, let's broaden our perspective. And explore the key trends shaping the telecommunications industry as a whole.
All right.
We'll delve into the potential impact of these trends on Singtel's business. And what all of this means for investors seeking to capitalize on the growth of the digital economy.
Sounds good.
Stay tuned for more insights. And a final assessment of Singtel's future prospects.
Welcome back to our deep dive into Singtel.
All right, so
as we wrap up,
yeah.
let's shift our focus to the bigger picture.
Okay.
The key trends shaping the telecommunications landscape
Yeah.
and their potential impact on Singtel's future.
All right, let's zoom out and look at the forces at play.
Okay.
What are some of the most transformative trends you see on the horizon?
Well, the insatiable demand for data is a major driving force.
Yeah, for sure.
Streaming, gaming, the Internet of Things,
Right.
and the rise of artificial intelligence,
Hmm.
it's all putting immense pressure on networks to deliver more speed, capacity, and reliability.
So it's not just about having a 5G network.
Well, it's not.
It's about constantly upgrading and expanding that infrastructure to handle the data deluge.
Precisely.
And this brings us to another interesting trend.
Okay.
The blurring of lines between telecommunications, technology, and media. Telcos, like Singtel, aren't just providing connectivity anymore.
Right.
They're becoming content providers, cloud service providers, and even venturing into fintech.
It's a whole new world.
It's like they're evolving into multifaceted digital conglomerates.
Yeah, it is.
Offering an entire ecosystem of services.
That's a great way to put it.
And with this evolution comes intense competition. Not just from traditional telcos.
I know.
But also from tech giants like Google, Amazon, and Microsoft.
Right.
All vying for a piece of the digital pie.
They all want to get a slice.
So Singtel is facing competition from all sides.
They are.
How are they positioning themselves to hold their own against these formidable opponents?
Well, they're leveraging their strengths, such as their extensive network infrastructure and their deep understanding of the Asian market.
Right. They've got a strong foundation.
They have.
They're also forming strategic partnerships and making acquisitions to bolster their capabilities in key growth areas.
That's right. Got to stay ahead of the curve.
Partnerships and acquisitions. It's like they're assembling a dream team of specialists.
It is.
To compete in this dynamic digital arena.
You got it.
Now, you mentioned another trend that's shaking things up.
Okay.
Edge computing.
Yeah.
Can you explain what that is and why it matters for Singtel?
Edge computing is about bringing data processing and analysis closer to the source.
Okay.
Whether it's a factory floor, a smart city, or even your smartphone.
Right in our pockets.
Exactly.
This reduces latency.
Yeah.
Improves efficiency and opens up exciting new possibilities for real-time applications.
All that good stuff.
So instead of sending all the data to a central cloud, it's processed locally, making everything faster and more responsive.
Exactly.
How is Singtel capitalizing on this trend?
Well, they're building edge computing capabilities into their 5G network and their data centers, creating a platform for next-generation applications that demand ultra-low latency, like autonomous driving, augmented reality, and remote surgery.
Wow, that's pretty amazing.
It is.
It's like they're weaving intelligence into the very fabric of their infrastructure, making it smarter and more capable.
That's a great way to put it.
And let's not forget about cybersecurity.
Right. That's always top of mind these days.
As we become more reliant on digital technologies, the risks of cyber attacks are also increasing exponentially.
They are. It's a constant cat and mouse game.
It's a bit like the Wild West out there in cyberspace.
It is.
With constant threats lurking around every corner.
You said it.
How is Singtel addressing these concerns?
They're investing heavily in cybersecurity technologies and expertise. Offering managed security services to businesses and partnering with leading security firms to enhance their threat detection and response capabilities.
So they're not just protecting their own networks, but also helping their customers stay safe in this digital frontier.
Exactly.
They're taking a multi-layered approach to cybersecurity, recognizing that it's an ongoing battle that requires constant vigilance and adaptation.
Couldn't have said it better myself.
Now, after this deep dive into Singtel's business, their financials, and the broader industry trends, I'm sure our listeners wondering,
I bet they are.
What does all this mean for potential investors?
Well, as with any investment, there's no easy answer.
Right.
It depends on individual risk tolerance, investment goals, and your own assessment of the company's future prospects.
Right.
We've provided a comprehensive overview.
Yeah, we've covered a lot.
But it's crucial to conduct further research and due diligence.
Yeah, do your homework, folks.
Before making any investment decisions.
Absolutely.
We've laid the groundwork for informed decision-making.
So as we wrap up this episode,
what's
the key takeaway you want our listener to walk away with?
I think the key takeaway is that Singtel is a company in transition.
Okay.
undergoing a fascinating and complex transformation.
Yeah, they're really reinventing themselves.
They are.
They're making bold bets to seize the opportunities of the digital economy, but are also confronting significant challenges.
Right.
Their success will depend on their ability to execute their strategy, adapt to evolving trends, and address the concerns of their stakeholders.
All those things are going to be key.
It's a dynamic story.
It is.
And it will be interesting to see how it unfolds.
That's for sure.
It's a reminder that the business world is constantly evolving.
Absolutely. Never a dull moment.
Companies like Singtel must constantly adapt and innovate to stay ahead of the curve.
Got to stay sharp.
And as informed investors, it's our responsibility to stay engaged, keep learning, and ask the right questions.
Well said.
Thanks for joining us on this deep dive into Singtel.
It's been a pleasure.
Until next time.
Yeah.
Keep exploring, keep learning, and keep diving deep.